Hey folks, I'm best-selling author of The Power Zero, David McKnight. In today's video, you'll see part 5 of my conversation with certified financial planning professional Mark Bialik, in which we discuss the one feature your annuity must have to help you avoid getting crushed by taxes.
I want to talk just briefly about your principal protection plan before we wrap up here, because this is something that Ken Fisher is not real high on. Dave Ramsey, Susie Orman don't love these types of arrangements because at the end of the day, it's that when you get right down to brass tacks, it's that verboten word, annuity. It's basically an annuity. You're basically taking a chunk of your liquid retirement savings, you're handing it over to an insurance company who mitigates longevity risk much more effectively than you and I do, right? And like you said, had they been in bonds, they would have lost 8 to 13% last year. Had they been in an annuity, they would have experienced safe and productive growth, but they wouldn't have lost any money. So one of the things that I talk about in my book, Tax-Free Income for Life, is that annuities are great. However, when you put money into a traditional annuity, basically it's 99% of the time it's done within the tax deferred bucket. And if it's done within the tax deferred bucket, then essentially you're cementing your risk and your exposure to rising tax rates over time because, annuities are inherently illiquid. Once you put the money in, it's very, very hard to get out if you wanted to do, for example, a Roth conversion. And so one of the things that I talked about in my book, Tax-Free Income for Life, is let's take all of the benefits of these annuities. Let's take the safe and productive growth. Let's take the ability to take a guaranteed lifetime income stream. But let's make sure that we're only utilizing annuities that have what I call a piecemeal internal Roth conversion feature, which allows you to shift money from the IRA portion of your annuity to the Roth IRA portion of your annuity in an amount of your choosing over a time period that your financial plan calls for. If you don't get an annuity that has that type of feature, then what you're stuck with is an annuity that says, yeah, we'll let you do a Roth conversion, but you got to do it all in 1 year or don't do it at all. And can you imagine, Mark, if one of your clients came to you and had one of those annuities and said, hey, I want to shift $500,000 to my Roth conversion, and they realized that all as income all in 1 year, could you even imagine the tax implications of doing so? Anyways, it's something that people need to think about, that not only should you be thinking about, the longevity risk, but you should be thinking about the tax rate risk that goes right along with it. Historically, most advisors have said, I'm either going to focus on the longevity risk by giving you an annuity, or I'm going to focus on tax rate risk by keeping your money liquid and allowing you to do a Roth conversion. And so what we say here at Power Zero is we say, let's allow you to do both. Let's allow you to mitigate longevity risk and tax rate risk all within the same financial plan, which historically has been very, very difficult to do. And that's really a hallmark of Power Zero planning.
Yeah. And Dave, I'll give you full credit that you taught this strategy to me with not necessarily principal protection. I was featured in the Wall Street Journal in 2010, because I used what are called structured CDs when I was at Wells Fargo. And I used them quite a bit, and so much that, I ended up in the Wall Street Journal talking about it. And they were a principal protected viable strategy at the time. In my opinion, they're not now, just because of the way they're structured. The annuity universe is very complex. It can be very expensive. You have to be careful. You have to understand the products and platforms that you're dealing with. You truly, in my opinion, have to work with someone who is unbiased. I don't recommend people go directly to the company or somebody who issues the policy. I had a very good friend one time who worked for a property casualty company, and she placed someone in an annuity. Now, she's a property and casualty insurance agent, but they wanted them to also sell annuities. And she was very happy telling me over lunch one time how she took this person's $100,000 and put it into an annuity, because it was a fixed annuity, which means it's like a CD. You're getting whatever he was getting at the time, 4.5%, let's just say, because he didn't need that money for the next year or so, and he won't need it until he buys a house. And I said, how old is he? And she said, he's 42 years old.
Ooh, ouch.
Yeah, exactly. So the reason listeners, why Dave just went, ooh, ouch, is because any growth, any interest that was applied out of that annuity, he really can't touch without a penalty, because once it's in an annuity inside of a non-IRA, the growth of it is treated like an IRA. And that means if it's taken out prior to 59 and a half, he pays a 10% penalty on that distribution, which obviously will greatly affect the 4.5% interest he's earned. So that's just an example of somebody who really didn't know, good intentions, but really didn't know. And there's just a lot of examples about that. So when Ken Fisher famously says, there's nothing you can do in an annuity that you can't do on your own. That is patently untrue, because I have spent time with the folks at these annuity companies, and I understand the layering of option strategies they do, and how they issue these options to cover the liability that they have, because they're contractually promising you will not lose your money. Right. And in a fixed indexed annuity, and this is not a recommendation, but not a variable annuity. Variable annuities are very different. Single premium immediate annuities are very different. The universe is complex. What Dave and I are talking about typically is a fixed indexed annuity. So you have to be concerned about the costs of those, because some have costs, some have zero costs, zero fee. But you cannot, I cannot, I don't know of any individual investor who can work and place the option strategies that these companies have and can do on a sophisticated level like they can, to protect the investments and have some productive growth. So that is very, very important. And Dave, what I learned from your group, and it's just like Ed's group with the constant information, is when I started using these in this strategy, there were two companies that allowed for the piecemeal Roth conversions. That is, as Dave said, you can convert the appropriate amount for you within the annuity without losing the guarantees of the contract, things like that. There are only two. Now there's four, right? Is there any more than four now?
A couple have come online of late. I like to think because they felt induced to do so because of what I wrote in my book, Tax Free Income for Life. You never really know the story, but it's starting to grow. I think people are starting to realize that we are marching into a future where tax rates are likely to be dramatically higher than they are today. And if people have their money cemented in these tax deferred vehicles like annuities, they have no real way. They just got to sit on the train tracks and take it when that tax freight train bears down on them. So yeah, there's more companies are coming out, and I hope that more and more come out so that we have a wider offering for people who are looking to shield themselves from volatility and longevity risk and those types of things.
Yeah. And that's all good. Competition's good. But again, you've got to understand the details. But I want to say something that whether it's tax efficient planning, the power of zero strategies and paradigms, it's not about annuities, and it's not about life insurance. It's not even about just Roth conversions. I mean, that's our favorite tool, right? I call it the gift that the IRS gave us, to be able to just without regard and without guardrails, we can convert as much as we want. That's our calculation to do, and that's wonderful. We don't have those same kind of flexibilities in almost every other area of the tax code, right? But it's about understanding tax efficient planning. It's about understanding the tax code. It's about understanding the strategies and taking advantage of all these different, as Dave says, the nooks and crannies of the tax code, to be able to move your assets from what my friend and mentor Ed Slott says, from forever taxed to never taxed. Right. So if it's a Roth conversion, it's never taxed again, but that's okay. I'll give it to Ed. From forever taxed to never taxed. That's the strategy in a nutshell. It's just really operationally and strategically, how do you get there? So it's not about annuities. It's not about life insurance. It's not about Roth conversions. It's about all of those things and using the tools that we have.
And I really hope that everybody who's watching can sense that, if you're trying to shield yourself from longevity risk and tax rate risk, it's not an easy thing to do. And if there are all sorts of pitfalls and detours and roadblocks that stand between you and the 0% tax bracket and you and purging longevity risk. So I would encourage people to check out Mark, AttleboroWealth.com. Is that right, Mark?
Yes. AttleboroWealth.com.
AttleboroWealth.com. And if you want to learn more, you can go to davemcknight.com as well. But really, you need to work with somebody who has experience in shepherding people through this process. If your advisor has never talked to you about this stuff before, it's one of two reasons. Number one, they know about this stuff and they haven't told you, or they don't know about it. And frankly, Mark, I don't know which one's worse. So, so Mark, I really want to thank you for being on my channel.
Sure.
And I think everybody had a chance to see how well versed you are in these concepts. And hopefully, everybody who's listening felt like it was a fruitful conversation. So, Mark, once again, thank you for being with me today.
Oh, you're welcome. It's always a pleasure, Dave. Thank you.
Okay, folks, that was part 5 of my interview with certified financial planning professional Mark Bialik. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement that shields you from the impact of higher taxes down the road, head on over to davemcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the Power Zero Network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified Power of Zero advisor, head over to powerzero.com and opt into my free video series. And if you have any comments or questions, feel free to drop them into the comment section below. I respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.